Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, Tesla shareholders backing Elon Musk's trillion-dollar pay package. In response, the billionaire made some big predictions about what the company will achieve in the years to come. Musk touted the company's humanoid robot, Optimus, which he said will one day be able to perform surgery and even establish bases on the moon and Mars. He also said Tesla's car business will aim to ramp production back up by roughly 50% by the end of next year. Musk has many milestones to reach before unlocking that massive pay package. Plus, NVIDIA CEO Jensen Huang telling reporters his company has no current plans to ship anything to China. The CEO said NVIDIA is not in active discussions to sell its Blackwell AI chips in China. The Information also reporting the U.S. is blocking sales of NVIDIA's scaled-down chip designed for China. The chipmaker currently remains barred from selling AI chips in that nation, and the U.S.-China trade accord did not include approving sales of NVIDIA's Blackwell chips to Chinese customers. And airlines across the U.S. are cutting flights amid the longest government shutdown in history. Following the FAA's order to cut flights at 40 airports, airlines must slash total daily domestic operations by 4% starting today, 6% by Tuesday, 8% by Thursday, and 10% by next Friday. The big four airlines are going to be the most affected by the flight reductions. And speaking of the shutdown, today would have been Jobs Day if the government were open. It marks the second month without a national employment report. The absence of government economic data will likely make for a difficult Fed meeting in December. Let's get a check in on stock futures right now. We are seeing a little bit of pressure here once again today. So NASDAQ futures pointing to a drop of about 0.5% at the open. We've got the S&P and Dow futures pointing lower as well. There seem to be some lingering concerns about valuations. A little bit of selling pressure has materialized this week in the market, so we'll see how this Friday session plays out. Let's dig now more into our top story of the day. Tesla shareholders approving CEO Elon Musk's $1 trillion pay package. The compensation agreement getting 75% support among voting shares when it was announced at the company's annual shareholder meeting. Senior autos reporter Pras Subramanian joins me now with the top takeaways from that meeting. So Pras, he got the vote. Now he's got a lot of jobs to do.
Yeah, more than just one, right? So we saw the vote. They went through all the different proposals, and at the end of the meeting, they announced that Musk won the approval for his $1 trillion pay package by over a 75% vote. So that's good to see. Now, I believe Musk was able to vote his own shares in this, so that's why able to get past that 75%, because before that, the other proposals last year and the year before were below 75%. Anyway, with regards to that pay package being approved, that's great news, but then they also has to hit all those different tranches, all those really high-end, really scaling up style type of milestones, like, for instance, 20 million cars, all the robots, right? A big EBITDA goals, right? But a few things that Musk sort of mentioned during his Q&A after is that a few interesting things. First of all, they're going to scale up Optimus assembly at both Giga Austin and also Fremont first, then Giga Austin later. He also mentioned that the Cybercab is going to come out for April 2026 production, which is a nice thing to hear, an actual target date there for production of that car. We've seen a couple of them here and there. They look a little bit different than the car they revealed back in October of last year, but still more the same. No pedals, no steering wheels. We'll see about that. Also, 3 of the board directors were nominated too. And then we're one nomination to the board, but then also XAI. Tesla said that shareholders approved the XAI investment, but there was a bunch of abstaining votes, so they want to reevaluate that in the future.
Well, and one other thing, one of the other items that was voted upon was whether Tesla should invest in XAI. That is something that Musk himself has sort of pushed for, but then also said the shareholders should vote. And it sounds like that shareholders did approve that, but the board is not sure if they want to do it. What do we know about that?
Yeah. So basically, essentially the shareholders did approve it by a majority vote, but there were a number of abstaining votes. So the board says they're going to evaluate that decision. Now, some commentators think that means that the board was sort of lukewarm on it, and they still kind of want to put that in the back burner and think about that later, because of the fact that, let's be honest, both Tesla and XAI are sort of doing similar things in the world of AI, right? They're both working on AGI. They're working on potentially putting that into physical objects, right? So that's sort of maybe why the board is a little hesitant right now. They want to get more information, see if that makes sense. Musk has said that it does make sense, not just an investment, not a merger, just an investment makes sense.
Right. So we'll see what happens on that front. Pras, thank you so much. Appreciate it. Mm-hmm. Well, Elon Musk spoke about Tesla's path forward at the company's annual shareholder meeting as well, focusing on the shift to robotics. He said the robots will be bigger than the company's car business, and he made claims about what they will be able to accomplish.
You know, people often talk about like eliminating poverty, giving everyone amazing medical care. Well, there's actually only one way to do that, and that's with the Optimus robot. With humanoid robots, you can actually give everyone amazing medical care.
Musk didn't give a date for hitting those goals and talking about all that. Joining me now is Brett Winton, ARK Invest chief futurist, who spends a lot of time thinking about these future sort of possibilities. Brett, it's great to have you here. Of course, ARK is an investor in Tesla, and you guys were in favor of this pay package for Elon Musk. What do you think now does this unlock? Now that this hurdle is sort of behind the company, what does this mean for Tesla and the next step forward?
I think it's great for Tesla. I think it really opens up the option value into the humanoid robot opportunity. And, you know, he mentioned investing in their own single source fab. So it allows him to really push the company towards the future. Without Elon's leadership, I think it would be very tempting for shareholders to try to extract the rents off the robotaxi business without reinvesting. And ultimately, we think the humanoid robot opportunity is an order of magnitude larger than robotaxi. And so I think it's worth the investment it will take. And it'll take a lot of investment. I think there's going to be a lot of money that pushes into developing out the humanoid program. And I think he's the right person to lead that transition.
I'm going to focus on one word you said, which is ultimately. Because as we know, Tesla and Elon Musk specifically have a history of these big ambitious goals, many of which he meets eventually or ultimately, but he tends to push back that timeline quite a bit. So I'm curious how you're thinking about these various possibilities, whether it be Optimus or the robotaxi, and how soon this stuff is actually going to be material for the company.
Well, robotaxi is, I mean, I've ridden in one in Austin. I drive around in FSD every day. It's both in real time, a marvelous, remarkable, magical product. And we think it's going to produce marvelous, magical cash flow for the company in the immediate term, within the next year or so. Once they activate a fleet of robotaxis in the US, we think they're going to enjoy a natural monopoly position in providing inexpensive point-to-point mobility across multiple cities and scaling exponentially. And so it really will become, for many people, the default mode by which they get from place to place. And the cash flow it'll kick off, we measure in the perspective hundreds of billions of dollars. So a great return for shareholders. Now they're going to have to take that and invest in a lot of AI compute and a lot of hardware innovation in order to make humanoid robots work. And like you say, it's yes, they're going to try to produce 1 million robots in his pay package by the end of 2030. I think that's going to be a hard and steep climb to get there. Ultimately, in the 2029 to 2030 timeframe, we do think these products will commercialize in a generalizable, broad way, and that it'll be amazing for humanity and amazing for Tesla. And I don't underestimate the challenge that they're undertaking in going after the opportunity.
I want to come back to this, but I want to first ask about something you said, which is the robotaxi being a monopolistic opportunity. And I'm surprised to hear you say that, considering not only do they have a competitor, they're not the first one on the roads, right? I'm talking about Waymo, of course. Why do you think that Tesla's going to be so dominant when Waymo beat them to market and is already out there in multiple cities?
Sure, and I've ridden in Waymos, and they're also amazing, magical products. The problem is their cost basis. The cost that they can profitably provide that service seems to be on the order of $3 a mile. And so it's cost competitive with Uber, and it's a great product. And they have around 2,000 vehicles in the US as a whole. Tesla produces 2,000 vehicles out of its Austin factory before lunch every day. And so once they're able to software deliver an update that allows those to operate as robotaxis, they'll have an extreme scale advantage. And then next year, they're going to begin producing the Cybercab, which will give them a cost per mile advantage. So they'll be able to offer people an amazing price and an amazing service. The Waymo is great. I still don't rely on it 100% of the time or even 50% of the time because there's only a few of them. And so often wait times are too long. And people really want a default that they go to for all of their transportation needs. That's why Uber has worked over time. And we think Tesla will be in an actually even more advantaged position once they scale robotaxi.
Brett, when we talk about the various milestones that Musk has to hit in order to get, there are these 12 tranches of this pay package, so it's not just in one shot. It's going to take a while. He has to hit a bunch of different goals. If he doesn't, given the timeline challenges he's had in the past, what is the risk that he doesn't hit the goal on time, doesn't get that tranche of the pay package, and sort of loses interest, right? Which has been a challenge with him in the past and was the whole reason, or not the whole reason, but a reason that folks voted on this pay package in the first place. How much of a risk do you view that?
No, I think he's, maniacally dedicated to Tesla, and he has been, and he will continue to do so. I think that the value of the pay package is to give him, it's not the money that I think he's interested in, or that we're even interested in necessarily giving him. It's the control. It's if he can deliver on even a subset of these milestones, it would be really unprecedented in terms of shareholder return in history. And it would give him license to continue to push the company forward into the future. So even if they don't deliver on all of them, and many of them we think are quite achievable within our expectations for the company, it will give him additional control of the company to make sure that it is still at the leading edge of innovation, even as it scales and becomes remarkably cash flow generative. The danger of having a company that delivers a service that everybody uses and that kicks off a lot of cash is it's easy for that company and its management team to really, and its shareholders, frankly, to get kind of dumb, fat, and lazy, where they're like, oh, this cash flow is nice. I'm satisfied to not deliver a better, more compelling experience to my end customers because I can just dominate this particular subsegment of the value chain. Well, we don't think that that is the best future for Tesla, and nor does Elon Musk. And that's why we're excited to have him, continuing to push the company forward.
Brett, I want to switch gears and ask you about crypto, because that's something that ARK has been all in on in a number of different ways, including introducing your own crypto-related products. But I know that Cathie Wood, of course, who heads up ARK Invest, recently talked about a bit of a lightening up on your Bitcoin position because of the changes that stablecoin has wrought in the market. What can you tell us about the thinking behind that and what that means for your investments?
Yeah, you can think of there being a cryptocurrency revolution, which is really alternative monies that allow people, particularly in emerging markets, to get access to kind of more stable currencies than they have before. And then a smart contracting revolution, which is really transforming the financial ecosystem. And smart contracting is catalyzed and superpowered by stablecoins. Stablecoins also offer people in emerging markets access to the dollar that they previously didn't have. And so part of the promise of Bitcoin is if you have a currency that is shakier and more inflation prone, it's being mismanaged, you can get out of it into Bitcoin. Well, now you can also get out of it into a stable coin. So stable coins, dollar denominated, are insurance packages against your existing currency. Well, Bitcoin is basically an insurance against the dollar. So we think Bitcoin will still play a super meaningful role in people's asset allocations. In fact, if you look at what's happened to gold, just as a digital gold, you have to kind of underwrite a better return for Bitcoin just because it's lagged relative to gold to date. And we think there should be a catch up at some point. And I think that you can't deny that kind of the flood of synthetic dollars into markets is allowing people to find alternative mechanisms to protect themselves against mismanagement of their local currencies. And
just very quickly, Brett, in the short term, what do you think the sort of near-term bottom for Bitcoin could be? Yeah, it's a tricky question, right? I mean, you can look at the technicals and you can say this $100,000 level is important. And then there's another a little below here in the kind of like 95-ish range.
We don't look at things over the short term for a reason. I think it's very hard to call the latest market mania. Over 5 years, we think that public blockchains and Bitcoin in particular are amazing exposures because they are a better money. And they're a better mechanism by which to store and transmit value, across all of our strategies, across our venture strategy, across our public equities. We look out 5 years and we have 5-year price targets for a reason. So you can't come back to me and complain about what it's doing next week.
Okay, fair. I was trying to pin you down there, but Brad, thank you so much. Appreciate your time this morning. We'll be right back on Morning Brief. Time for some of today's trending tickers. We are watching Constellation Energy, Block, and Opendoor. First up, Constellation. The nuclear power company posted weaker than expected quarterly earnings and narrowed its full-year guidance, but the company did post revenue for the quarter well above estimates at $6.5 billion. Constellation shares have jumped by more than 50% this year, driven by surging demand for power to fuel AI data centers. Next up is Block. Shares of the fintech firm sinking after third quarter revenue fell short of Wall Street's expectations. Still, Jack Dorsey's company raised its full-year profit forecast and posted strong growth in consumer banking. This is the third time Block has adjusted guidance this year. The stock tumbled in May after it reduced its guidance, citing a more challenging macro environment. The fintech firm, which operates Cash App and Square, added 300,000 new primary banking users in the quarter, those shares down more than 13%. And finally, Opendoor, those shares sinking after posting disappointing third quarter results. The real estate company that became a meme stock in recent months is grappling with a weak housing market. During the earnings call, interim CFO Christy Schwartz said third quarter results reflect the deliberate choices made earlier in the year to prioritize risk management over volume growth. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, it's been a choppy week for tech stocks, and that often gives rise to the question, are we in or are we approaching an AI bubble? Our next guest says bubble talk is overdone, but indeed the market could be due for a correction. Joining us now, Nancy Curtin, Chief Investment Officer at Alton Tiedemann Global, which manages more than $70 billion in assets. Nancy, it's great to see you. It is
lovely to see you as well.
It's been a really interesting week. We saw a pretty sharp sell-off earlier in the week, and then we've seen this choppiness and this sort of uneasiness come to the market, particularly around tech stocks. What do you make of that? What does it reflect, and could we see more of it?
Well, look, we think the market is overdue a correction, and therefore, this week, next week, we could easily see the market go down another 2 or 3%, get to that 50-day moving average, and perhaps even below. Our sense is that going into the end of the year, the market will continue to do well. Remember, seasonally, November, December tends to be good for the markets, and there's a lot of cash on the sideline, a lot of strategists that have missed this rally. So, but we do think a correction is overdue. Trees don't grow to the skies, etc. We should talk a little bit about the bubble talk on Gen AI. It's our view that this is not a bubble in the classic sense. Sure, there's a lot of stocks that may be slightly in bubble territory, valuations that are extreme. But I think one thing investors need to keep in mind is that innovation bull markets, and this is definitely one of them, tend to last longer and valuations go higher than people expect. Why is that the case? Because an innovation-driven bull market, unlike a cyclical or liquidity or recovery from recession type of bull market, fundamentally, you are adding earnings and productivity in infrastructure investment to the economy. And that's very powerful. It doesn't mean it doesn't go through fits and starts and have volatility, but these innovation-driven bull markets, as I said, tend to have further upside than investors expect. And that's our sense here. Ultimately, all bull markets are killed by the Fed, but they seem to be in an easy mode at the moment.
Well, and Nancy, I think there's the question of whether it's a bubble, and then there's also the related but separate question of what kind of return on investment all of this investment and this innovation cycle is going, what are the fruits of all of this? And it feels like that is a legitimate question, but to your point, maybe not one that is really going to come home for the next year, 2 years, who knows? I mean, how are you thinking about that question?
Well, when we look at the hyperscalers, the earnings were announced last week. As far as I could see, they all beat on the upside, both revenue and earnings. They all talked about the fact that demand is outstripping supply to the tune, perhaps not Meta, because it's harder to measure advertising, but it looked like it certainly was being monetized in the form of accelerated cloud revenue, and in the case of Alphabet, more users on Gemini, et cetera. So I think there was some very good news in the earnings last week, and companies like Alphabet and Amazon responded in kind. So I think we have to look at looking forward as CapEx will continue to get spent. There's no question that these large hyperscalers are going to want to continue to build the infrastructure, and that means there will be some overcapacity at some point. Not everything will deliver its return on capital. Not everything will reach its monetization benefits. But we're beginning to think you've got to skate to where the puck is going. And what I mean by that is the application, the foundation, the infrastructure layer has been a source of the ebullience. We want to look now at the users of that infrastructure, the beneficiaries of the infrastructure, and the companies across both consumer and enterprise applications that embed that in their business and get the benefits from a productivity or efficiency perspective. And we don't think that's priced in.
Nancy, I want to ask you about a specific company in particular, and that is NVIDIA, which is reporting on November 19th. So that's another catalyst for us to watch in the market. And we've got some headlines about its ability to sell chips into China, the information reporting that it's not necessarily going to be able to sell chips into China. So there's this kind of back and forth on that. But how are you thinking about NVIDIA as one of the real cruxes of this whole trade?
I mean, at the moment, and we invest in managers, our active managers have either reduced or have brought down the NVIDIA weights. I just put that out there by way of, sort of some things maybe ahead of themselves. In terms of NVIDIA and what they might announce, we don't know, but what we do know on November 15th, NVIDIA's talked about the fact they have sort of 14 million Blackwell chips to ship over the next 5 quarters. That has very powerful implications, I think, for this quarter earning and earnings ahead. People will continue to move their numbers higher. I mean, Jensen Huang at the big NVIDIA conference talked about $500 billion backlog. And every time you hear a hyperscaler say they're going to invest more in CapEx, you have to think that plays at least near term until there's substantial competition that really plays to the benefit of NVIDIA. So no one has penciled in NVIDIA's numbers China sales. That's just not in there. I think people are a little disappointed that Trump didn't strike a deal with China on the Blackwell chips, but it's not in NVIDIA's numbers. But as I said, we want to look forward to where the puck may be going, not just the infrastructure company, but the amazing things that we think are happening and will continue to happen in the users of that infrastructure, in the application layer, et cetera. And, earlier you were talking about humanoids and robots. That's a whole nother layer of Gen AI applications still to come.
Nancy, great to see you. Thank you so much and have a great weekend.
You too, thanks.
That does it for Morning Brief. We've got much more ahead on Yahoo Finance. Opening bid is next. Stay tuned.